Well, we know that South Africa's unemployment rate is over 25% and could get worse with the IMF's growth forecast lowered to 2% from 2.8%. And of course, wage negotiations are underway. It's a sensitive issue. With me now is Lone Sharp, who's the labour economist at Adcorp. Lone, I've been meaning to talk to you ever since I saw a report from Peter Attard-Montalto, who's a regular guest on our shows. A very sober analysis, it seemed to me, and he said if we have a platinum price, just to take the platinum industry, a platinum price at 1,500, and we have costs increases of 8%, both of which sound optimistic at the moment because the platinum price jumped this morning, but it's still way below 1,500, and costs at 8% with electricity and wage demands and so on seems unrealistic. He was talking about wage losses in the platinum sector of, in the next 2 to 3 years, of between 140 and 150,000. That's 10 times what Amplats said it would retrench and then had to back down.
Yeah, I think those are going to be the orders of magnitude that we will see in job losses. We're not quite so pessimistic. We're looking for 120,000 job losses over the next 3 years in mining as a whole. But just to put that in perspective, in 1990, mining employed 1.2 million people. Today, it employs around 500,000. And of course, the way mines have achieved increased production with reduced labour is through mechanisation and automation. So there's a tremendous impulse to mechanise and automate in the mines. That means mining companies will approach the stock market, issue stock to raise capital for their capital investment projects, all of which is negative, I would think, for investors. The thing that worries me most in the mining sector is how terrified management is of interacting with trade unions at the moment. The unionisation rate in mining is now 80% of the workforce, 81% of the workforce, which is giving rise, as union membership is becoming saturated, it's giving rise to inter-union rivalries, crises of relevance, etc. But what's happening is that unions have taken over managerial prerogatives in the mining sector. So certain aspects of mining are now run by trade unions and not by management.
Is this a generation of managers that have forgotten or never knew how to negotiate and know when to be tough and when to be soft?
I think this goes back several layers of management back. Bobby Godsell and Cyril Ramaphosa effectively carved up the mining sector between themselves decades back and struck deals that are today bearing poisonous fruit. So I think today's managers in our mines don't have a clue how to manage labour relations, and for reasons that go back to labour laws agreed in 1995. So South Africa is already the very worst country out of 144 countries in terms of conflict in labour relations. I expect that to get worse. I'm not looking so much for industrial action in the mining sector. The AMCU obviously is a wild card. I'm looking for industrial unrest in the public sector. There are many reasons why the public sector workforce is hugely disgruntled with the collapse of managerial capacity in the public service. So I don't think mining is going to give us anything like the headlines we had last year at Marikana. My understanding of those events was really it was police ineptitude that brought the headlines.
And panic.
And just general panic within the police. We're not going to see anything like that this year.
But let's just look at that number of, you say 120,000 in mining generally. Peter Montalto was talking about 140,000. Either way, this is a huge amount compared to the number which got government so upset earlier this year. I mean, surely there's not been enough thinking by government, by unions, by the industry itself about how they're going to handle this. Because the mines can't stay open if they're not making money.
Yeah. Look, we've been quite outspoken at Adcorp, but I think we're largely alone in this area. The mining companies are not speaking out. Even when the mines talk about restructuring and reorganizing their workforces as at Amplats, They don't mention labour laws and regulations. They don't mention unionisation. They don't mention lack of productivity agreements. They're too afraid to upset the government as a stakeholder. And so long as our minds are not honest with government about what the issues are, I don't think we're going to have a solution in the mining sector. It's totally naive for the Deputy President to think that dialogue, putting people around a table is going to produce any sort of solution. What is needed is to cut back on union membership in the mining sector through a pact with unions. Maybe we have a new institutional arrangement where unions don't represent mines collectively, but we have individual workplace unions. There are many innovative structures from around the world that can give rise to labour peace without compromising union membership.
Maybe this is like asking you to pick a winner of the Durban July horse race, but 60 to 100% of the demands. The industry, Goldfields and Harmony in particular, Graham Briggs and Nick Holland have said, we're certainly not doing double-digit increases. We can't. I mean, the gulf is huge. Where are they going to settle in the end with such a huge gap?
I think this is the perfect opportunity for mining management to insist on productivity agreements. You know, a mine doesn't mind paying 12 or 14% increases if there are corresponding productivity gains. What is really problematic in the mining sector is that labour productivity is at nearly a 50-year low and wages are at a 60-year high in real terms.
And the last